Everyone's in the right place, I think. Yep, matching. Good morning, everyone. My name's Gareth Jenkinson. I'm the managing editor of Cointelegraph. Recently stepped into that role. It's a great pleasure to be with you this morning. We've got a fantastic panel, and we have a big task ahead of us, chatting about the current and future narratives driving this bull run. Before we get started, I just want to get a temperature check of the room. Who's been in crypto since 2017? Can I get a raise of hands in the crowd? Okay, so a fair amount of people have seen 3 bull runs. I also got into writing about crypto in 2017 for Cointelegraph. I've been with them as a freelancer and full-time over the past 3 years, but you know, a good 7 years in the space, and we've seen some pretty heavy ups and downs. Obviously, 2024 has been very, very interesting. We've seen everything from Bitcoin ETFs to the rise of meme coins, and there's a lot of narratives. I know Miko doesn't like that term, but there's a lot of narratives to discuss that are playing a role in the way the markets are performing at the moment. And I think it's fair to say that Bitcoin ETFs have officially kicked off the bull run, and I'm definitely going to ask Ben to Oscar to kick us off there, because he wanted to elaborate on this one.
Yeah, thank you very much for the voice. So I can say that Bitcoin ETFs just begin the bull market, because I just see the beginning of the bull market correlated about BitSensor Tao and the AI trend which come from ChatGPT. And what I can say more, this is not the bull market as we see in the before cycles, because a lot of coins, all of the coins are not pumping. There is too less capital, too much of the projects. So this is the first main bullet which I can see. It's more about not altcoin season, but more about trend season. The capital flow through all narrations. Yeah, the main of the narrations is AI, as we see, but it's RWA and a lot of another of them. What I can say, we are talking about Bitcoin ETFs. Yeah, it's one of the strategic point that we see that Bitcoin is going to stay with us, and we must look at it and care about it. So yeah. That's main reason what I want to say about it.
Yep. I'll open that up to the rest of you. Thoughts on the ETFs?
Yeah, I want to comment a little bit, which is, you know, I want to boldly declare that narrative investment is dead on arrival. I think one of the reasons why is that is speculative investment, and therefore it isn't investment, right? So investment is basically based on foundation, it's based on thesis, and it's based on what you think, and it's what you think is going to happen, and it's based on fundamentals, right? Like investment is you give money to a business, the business deploys the money to use to create value, right? So like what we're talking about when we talk about investing in narratives is not investing, it's speculation, and it's speculation based on what you think other people's behavior will be, right? It's a short-term phenomenon. And by the way, it's a zero-sum phenomenon. So there's no additional benefit, which means that there are winners and losers. And so you have to be smarter than 50% of the market by volume, right? And that's the scary word, volume, because if you think you're smarter than 50% of the market by volume, you're outsmarting people with a lot bigger, you're outsmarting whales and people whose game it is. And this is why I think largely that retail has been sitting back from this wave, right? Because they got their fingers burned, right? So I think in a way, narrative investing, the thing that I think is happening now that's nuts is that there is this, I don't know if you guys are familiar with the meme curve, right? But there's the super genius, which is the right curve, and then there's the super stupid, which is the left curve, the degen, yeah, and then there's the mid curve, right? And the mid curve is the one who's the stupidest, because it's better to be super smart or super stupid, right? And those are the two places to sit, right? So the thing that I think is so important about this current construct is Where it's going to happen is applications. Applications are finally going to happen. For example, I'm aware of multiple applications that have minimum tens of millions of users that are coming to blockchain. Web 2 applications, right? Many are coming. And here's the thing is infrastructure, investors can see it coming from a mile away, right? Like infrastructure is like it's like watching a giant sandworm. Like you can see it coming, right? Because it's predictable, right? And it's slow and it takes a long time to build. Applications can just strike like lightning, right? And so, and the risk reward is very different, right? Because an application is based on hits. So you can have a hit application, and predicting that is very, very hard to do, right? So that's what I think is happening.
Yep, I would just counter that because obviously you've said you need to be careful about narrative investing because that's very speculative. The amount of money that is going into Bitcoin ETFs is very clear that a lot of smart people understand the value proposition of Bitcoin. They can't buy Bitcoin or they're not willing to hold it themselves, but they want some exposure to it, and now they have an investment vehicle to do that. Adrian, maybe you can jump in there and really just talk about why so much capital is flowing into this. And it's not narrative investing, right? This is very smart people putting their money there.
Yeah, right on. I mean, there's reality and there's perception, right? Our viewpoint defines our perception, which doesn't necessarily align with the reality, right? The reality may be an entire composition of all the narratives, of all the perceptions at the same time, perhaps. However, what I choose to do is I take a look at the facts and the numbers. It's something that cannot be refuted. And to me, those are translated into price charts very often, right? Because if I see a price fluctuation on the Bitcoin chart, I cannot deny it. It's happening. It's happened already, right? The fact that Bitcoin grew, for instance, 160% in 2023, that's a fact. Right, it started with a reversal at 9,500. It was 15,500 in November when the FTX basically collapsed. Right, that pinned the bottom, nailed to the coffin there. The market sharp, V-shape, kind of like to the upside ever from there. We are fairly high above those regions. We crossed the new all-time highs. We are at the new theme of the halving cycle, that the fourth halving has just happened. Historically, the halvings, again, facts, not opinions. Halving historically brought massive rallies to the subsequent peak from the halving date, from the halving price to the subsequent peak, for instance, in 2011, 2012. Through the peak in 13, we observed a 9,000% growth on the price appreciation. Through the next one, 2015-16 cycle, through the peak in 2017, we saw a halving to peak growth by 3,000%. That is a 90x and 30x. Those are facts. Yep. The third halving in May 2020 brought us a 700% rally to the subsequent peak in $65,000 or $69,000 approximately. Those are facts again. So what cannot be refuted, what cannot be defied is halving historically brought incredible rallies. And for most of the people who bought at the halving, they not only are in profit right now, still, they were in monstrous profits for a large period of time, right? So those are the facts. So there is no way to deny, there is no way to refute that halving historically brought massive price rallies. Hence, relying on the facts, we make certain assumptions, predictions. However, trying to guess the future, what the halving, in 2050, 2060, is going to look like. I cannot even predict if I wake up tomorrow, right? But I have no idea what's going to happen. Not to mention the week after, not to mention the year after, right? And so on and so forth. So sticking with the data. And the data also is very favorable for us. That align with the ETFs fairly well is that there is the election year. When I presented a keynote, the S&P 500 shows a very strong correlation with Bitcoin. Actually, Bitcoin shows strong correlation with S&P, and even more strongly attaches it aligns with the NASDAQ. It actually performs very similar NASDAQ seasonality type of a thing, right? Just like I said, temperatures have seasons. We tend to observe higher temperatures in the summer, lower temperatures in the winter. We tend to observe those seasonal aspects for the best 8 months from October through July for NASDAQ when compared with S&P October through April. You know, everybody perhaps might have heard of sell may go away, right? The NASDAQ is a little bit extended version of that, that translates into July, transpires into July still being bullish while observing weaker Q3, right? So the ETFs nicely aligned because there was demand from the institutions. There was the legal infrastructure, there was demand from the institutions, and there is an actual observation based on facts that all those funds, all those big pension funds also come in, all the central banks that are actually entering this space and from 2025 onwards, they are making the risk quantification, and they see the risk and they see the potential, right?
Ben, I don't know your thoughts. Maybe your users are following this trend as well. I mean, is Bitcoin the big driver this year in 2024? Because previous cycles we've seen different influences, you know. Last bull market was very much DeFi and NFT kind of summer.
Is Bitcoin, there we go. Yeah, I guess the question is Bitcoin the driver? I'm not sure that Bitcoin is the driver for retail, but it's definitely the driver for a lot of people. When you look back historically, like what has always been the thing that scares people away from Bitcoin, it's always things like, oh, what if the government bans it? You know, what if it goes to zero? But I think we're past that now, right? With the government's validated it across so many different, just like with the spot ETFs, with the states like Wisconsin, places like Hong Kong, South America, Latin America. So I think the risks here are very low. So it makes it a very attractive proposition to young people around the world. Middle-aged people, I mean, we're all kind of inherently greedy and we're looking for things that are going to improve the quality of life. What's interesting is the second thing people will always say is there's no utility to it, right? So if you look at what Miko just said about infrastructure slow, you know, for the last, 10 years, we've been building a lot of infrastructure. The applications strike like lightning. Once these applications start striking like lightning, then the utility naysayers also have very little places to hide, right? So all of this together, I mean, from my perspective, I'm always permanently bullish because I'm in the industry, but I think a certain segment will be attracted to Bitcoin, but then the retail masses are going to come because whether it's FinTech, an improved version of FinTech that works, or some GameFi application, or something like that. But yeah, not sure what it's going to be yet, though.
I want to add one thing about it. Yeah, you are exactly right. The whole of the things you said is a really good point. It's a big picture. You have a big puzzles, and I take and put one of them. And if you are in Bitcoin, yeah, because we are talking about it, I think it's really important thing to say what is going under the Bitcoin, because a lot of money, a lot of exciting developers, VCs, are talking, they are building really, really cool things under it. And I see some vibes like we were having in Ethereum, ERC20 trends, some DeFi, some another products, and it's happening. And I think it's a really good place because from 2010, nothing special was under the Bitcoin, yeah? And right now is the moment. And probably maybe we'll have some time of the BTC summer.
Yeah, that was the joke before. It's like you go to a Bitcoin conference or an Ethereum conference. At the Ethereum conference, everyone's building stuff. It's like, what are you building? You go to a Bitcoin conference, everyone's like, oh, I have Bitcoin. Do you have Bitcoin? Yes, I have Bitcoin, right? But now that's changed. Last week, Hong Kong had the Ordinal Summit. It was packed. The vibe there was very positive. Still, I think a lot of the Bitcoin wealth is sitting in Asia, particularly China. A lot of the old mining consortiums and the people who got rich off the exchange booms in 2017, 2018. And they're bullish, they're building, they're deploying capital, they're trying to get yield for the first time. They never had yield, it was just sitting there hoping the price went up. So when you have these people engaged, then suddenly there's so many more people bringing innovation to the space, and I think that drives in the retail.
So I do want to caution everyone around so-called Bitcoin L2. And the reason why I want to caution people is Bitcoin does not and currently cannot have L2s. So if someone tells you that they have a Bitcoin L2, they are either kidding themselves and they don't know what an L2 is, or they are trying to trick you, right? Because why does Ethereum have L2s? And by the way, does Solana have L2? Does Avalanche have L2?
No, they don't.
Do any of these have? Those are monolithic. They're not modular, right? Ethereum accepts off-chain proofs as peer to the proof-of-stake consensus, right? So proofs can come from off-chain, and the off-chain proof chains are called L2, right? Ethereum has L2 because Vitalik said modular, right? Satoshi never created an acceptance of off-chain proofs in Bitcoin, right? The only thing that's proven in Bitcoin is Nakamoto consensus. So Bitcoin does not have L2s. So I just wanted to clarify, I like the energy of building on Bitcoin, but much like I was talking about earlier in the keynote, the thing that's very important is know the risks that you're taking, right? Because earning yield on Bitcoin is attractive, but to me, the more honest thing to do is to sell your Bitcoin, buy Ether, and then put that into smart contracts and then earn yield or do staking or do restaking, right? That's more honest, because if you are going into a L2 bridge on Bitcoin, you just gave your Bitcoins to someone else. Now they have your Bitcoins.
But that was...
And they are pointing off-chain and telling you your Bitcoins are there when, in fact, those are not Bitcoins.
I totally agree with that to some extent. I just think that was the same criticisms that a lot of the early Ethereum L2s faced. Like with Polygon, their first bridge, everyone joked it was a multi-sig with Sandeep and his friends. So yes, there are a ton of risks, and I do agree it's more pure to be in
but the distinction is that Bitcoin Core has not signaled that in the future they're going to introduce an opcode that accepts proofs coming from off-chain.
Yes.
So just to be clear, right?
Maybe.
Which is the point is that Ethereum looks at another chain and says, I accept your proof, right? And Bitcoin is Bitcoin because it will never do that, right? If it does that, it'll be a fork of Bitcoin, because Bitcoin's entire value is paranoia, and it's not going to just willy-nilly accept trust coming from.
Let me jump in here quickly. So this is a very interesting narrative that I've observed in 2024, particularly with Cointelegraph's coverage. And I've been loath to cover Bitcoin L2s for this exact reason, right? There's a lot of affinity scams, as my good friend Joe Nakamoto often tells me. And you need to do a lot of due diligence when you're looking at builders that are building functionality on top of Bitcoin. You have Lightning, you're opening state channels on Bitcoin. You're able to transact with each other very quickly, and you are essentially, opening and closing a Bitcoin transaction on Bitcoin's mainnet, so you have the security of that, and that works right. It is what it is. You have BitVM and other new projects that are earnestly looking at developing protocols that allow for additional functionality on top of Bitcoin. Lightning Labs are doing fantastic work with this. I saw Elizabeth Stark last week in London, and she gave a very compelling talk about bringing stablecoin functionality to Bitcoin. And it's very clear, Miko, you make a great point. Like, you need to understand, if you're putting money into a Bitcoin L2 or trying to invest in a Bitcoin L2 and it's using bridges and swapping your Bitcoin for another token, you are not on Bitcoin, and you are giving up, not your keys, not your coin. I think this audience understands that very well.
I do want to make one more very scary point, which is, without naming names, I'm aware of a major Bitcoin L2, one of the first movers, fairly large TVL. Basically, the way it works is they've somehow convinced Arkham and Chainalysis that custodian wallets are their bridge. And so the way that works is that the custodians hold whale Bitcoin, and the custodians cut secret deals with whales where it's like, put your Bitcoin in this wallet and we will allow you to double spend. we'll give you layer 2 Bitcoins, but you retain custody of these Bitcoins. And what happens on-chain is everyone watching the on-chain transactions are watching the Bitcoins move into the bridge, but the agreement with the whale. So this is what's going on out there, people. So like, you know, watch yourself.
Yeah.
So people are following these whales and saying, oh, look at how much TVL there is in this L2. I can go in here now safely because there's so much TVL. It's a trick, so be careful.
Yeah, I think this goes to show that, right, like Bitcoin L2s and development on Bitcoin is very much a narrative this year. And do your research, you know, make sure that you understand what you're getting yourself into when you're starting to explore what some of these protocols are doing. With that being said, there are some very smart people at different, in various places, Rootstock Labs and stuff. They're doing some, you know, Sergio Lerne, they're doing some fantastic stuff, like at the forefront of really bringing functionality to Bitcoin. It's exciting for me. I'm not a developer. I'm a journalist by trade, and you know, I try to do as much research as I can to understand what they're doing. It's complicated. Do your research. We'll park that one for now because there's lots of narratives to discuss. Last one on Bitcoin. Runes came out during the halving. The halving happened as well. Very, very important narrative. Maybe Adrian, you want to chat a little bit about this? And fees spiked very, very high. They've come down a lot. Volumes of runes has gone down. Maybe that was just a lot of fluff, and it's going to disappear.
Yeah, right on. I mean, halving, halving what it does is every 210,000 blocks, it reduces the mining rewards by half, right? Down to 3.125. And approximately, it is not time dependent, it is block dependent. However, it still aligns very well with the 4-year presidential stock market cycle, which is kind of interesting because this, let's call it the narrative, a theme and tendency, a pattern, they align, they coincide, and they actually reinforce each other because, like I said, when I brought the case of S&P and NASDAQ being particularly well maintained and producing good returns over the years, 30–40% better returns than a typical annualized returns, you know, on S&P and NASDAQ. This empowers Bitcoin additionally, right? Because, well, what it means is that the people, the traditional finance that is different than crypto makes more money on the markets. Not only it empowers the economy 6 to 9 months later on average per the model, it also lets the capital flow into Bitcoin. And right now having, you know, the narrative of the regulatory aspects, right? The regulators, the regulators, putting aside anything that's happening on the SEC side, you know, and the Gary Gensler's role particularly in that. There are good things happening also in the European Union with the Miko regulations, market and crypto assets, and being unfolded in 3 packages. Eventually, it enforces a little bit more clarity to the industry and just basically dropping the curtain that's always been there present between the traditional finance, the TradFi, and crypto, right? This is a whole new gameplay basically to to acquire new quality levels, right? Something that was not really present before because there was this barrier. The traditional finance couldn't make business with crypto because anything that crypto was, basically at that particular time, was perceived as a scam, even though it doesn't necessarily tend to be classified as a scam. Most of the times, yes, statistically, but having the regulators, having MiCA, it gives us clear, good rules and guidelines for the businesses on the TradFi side, on the crypto side, to communicate. So there is an empowerment on the economy side, there's an empowerment on the financial market side, there's an empowerment on the regulatory side. You put a halving into it, right? Should I go on?
Yeah.
Well, what I do want to comment quickly, coming from the U.S. side, is that Gary Gensler, SEC chairman, is politically spent. So, you know, he pursued XRP. He pursued EOS, $57 million settlement, so he failed, right? He pursued XRP. He's going to fail. He's pursuing Coinbase. He's going to fail. He did not pursue FTX. He did not pursue Celsius. He did not pursue BlockFi, right? So, like, he's absolutely shooting his shot, and he's absolutely not going to be there pretty soon. So I think there is an election. There will be, you know, even if the Biden administration continues, Gary Gensler will not be there, I guarantee you.
Will that be a catalyst the day that Gensler's gone?
It may be. It could be. But my point is that you know, his political capital is gone. Like he really doesn't have a leg to stand on. So that's just my prognostication. I don't have any inside information on this, but I just think it's he's not behaving in a self-preserving way.
No, I tend to agree with you. I think you'll see a change of leadership there. One of the really big narratives, Miko hates it, meme coins have been around this year. Some people have made a load of money. Some people have been absolutely wrecked. Go ahead, Ben.
Oh no, I was just raising my hand for absolutely wrecked.
But yeah, I mean, in general, like my personal opinion, I think it's degenerate gambling, and I don't think it does much for the space. But there's other people that say, hey, they're bringing people in. You know, yeah, go for it. Oscar.
Yeah, sure. A long time I was thinking about memes. Why is going? Why is it pumping? What is going on? Yeah, and if I connected some dots, yeah, it's a speculation. Of course, it's not investing in fundamentals. Yeah, I'm agree with that. But when you see some points connected, some dots, you just see there is 100% tokens in the market, and a lot of people like to look at it and yeah, okay, no one is gonna rack these tokens for me. I'm not going to look and unlocks. I'm not going to play the game from some VC sometimes, some private investor seeds, calls, and something like that. So, yes, so the meme coins take out the market. Yeah, a lot of eyes are looking there, but they are risky too. Yeah, you must know where to look, find, for example, some groups which have a good success story about it, but it's still really, really risky. But this is the short path for some people to get millionaires. And we know that story, yeah? Shiba, Osaka, Doge, a lot of them. But right now, the capital is crazy about it, and what's more, they are unregulated.
So you know, my perspective is there is some logic to it, right? And the logic to it is, I mentioned earlier this meme curve, right? So there's the right curve, super geniuses, right? And then there's the left curve, which is super idiot, right? So in a way, super idiot is a really good thing, right? And in fact, there's a lot of super geniuses that are actually doing super idiot on purpose, right? So like, this is true, and there is some value. I think it's a revolution, right? Because in some ways, the name of venture capital has gotten very dirty, right? Because there's people who claim to be VCs who are now doing dirty deals. They're doing short vesting, right? Which is pump and dump. So they're doing deals where it's like, oh, give me faster vesting, give me a shorter cliff, and I'll dump on retail, right? And this is dirty dealing. Like, we don't do such things, you know. Investors don't do such things because investors want to build, right? Whereas people who are coin flippers, right, who are traders, day traders, are pretending to be VCs, right? This is giving the VC business a bad name, rightly so, right? And retail doesn't want to be dumped on, right? So the reaction is naturally degenerate, right? Which is it's angry, it's oppositional, it's demonstrative, and meme coins are the reaction, right? But the problem with that reaction is that meme coins are not fair either, and they're not safe either, right? Which is, you know, Adrian was saying that it is undeniable that the price change is recorded as history. But what's not knowable is who's doing it, why they're doing it, how they're doing it, and what lockups do they have or not have, right? So in other words, pump and dump is very real, right? So the question becomes price manipulation, right? And since that meme coins are largely unregulated, price manipulation is basically almost all that's happening, right? So in a sense, the idea of we're going to revolt against these masters and we're going to show them by trading this asset it's probably worse. It's probably less fair.
That's what's happened with GameStop, right? The last couple of days, people are pumping that up hard, and some of that froth is coming across into meme coins as well. Like my main question is, you know, as objectively as I can, like, if you're getting a load of degenerate traders just being like, hey, I'm going to ape into a meme coin and I might 10,000x from here and make my millions and walk away, is that okay if those people then turn into Bitcoiners? You know, if that's the entry point to get people into the ecosystem and to actually understand the value proposition of something like Bitcoin, which for me is, you know, the real point of this whole thing, you know, to give people true ownership of their money. are meme coins the avenue to get people in here? You
I
know?
mean, I like it conceptually, but it presumes a level of fairness and integrity in the market structure, right? Because to me, the people who are profiting off of meme coins are extractors, and the people who are extracting are actually disingenuous, and they're not actually interested in investing in the industry. They're actually interested in just
Supercars.
yeah. So they just want to buy Lambos. I mean, it's good for the Lamborghini Corporation, but it's not good for the industry.
I'm a vegan, yeah. I know these people. So a lot of people are just making money, for example, yeah, in meme coins and other things like that. But the safe haven for them is to have ETH, yeah. They are putting a lot more, collecting more ETH, more Bitcoin, and this is how it's going. But the value in meme coins is community, yeah. There are a lot of people. It's really easy to show them. Yeah, it's for example Dodge to the moon. This is what Elon Musk doing. Yeah, and I think the easy path, the monkey money, as you say. Yeah, sometimes you must be stupid in this market. Yeah, and as I see, if I was thinking really much, doing a lot of analysis, sometimes. It was really much worse. Then I just switch off my brain and just like a monkey follow wallets, follow some people, follow some trends, narratives, something like that. Yeah. So yeah, it's correct. Yeah.
Adrian, I see you had your mic there.
Yeah, it actually brings a little bit of similarity. When I think of the governments. At all, it's not necessarily aimed at US, although it's present everywhere, right? In every country. Like, if you do money laundering, that's bad. But if you launder our money, the government money, you're okay, you're our guy, right? So speaking of taking people, potentially from money laundering, into crypto, is this a good thing? Is this a good thing that they are the crypto bros right now? Well, maybe, but, the governments do it.
Yeah, that's food for thought. Another big narrative for me that has come up in pretty much the last month, but it's been brewing for a long time. Telegram, a few years ago, set up the open network, and there was a lot of pushback, so they removed themselves from it, and then it became independently developed. Now, Telegram, Pavel has come out and said, hey, we are going hard on blockchain. We are going to integrate a Web3 wallet into Telegram. They have 900 million users. This is a huge amount of people, a huge market that can be addressed through a very powerful app. I mean, questions around what Telegram does, I don't care. I use it, and it's there, right? There's a huge addressable market there. They've got blockchain games. It's going to allow people to monetize content on these channels. For me, it seems like the elephant in the room that maybe people aren't talking about as much as they should be. How do we feel about Telegram, and is that going to be a big narrative in the next year?
I'm fairly excited about it. I think Telegram burned their fingers, right, which is great. Because obviously, if you burn your whole body, then maybe you don't survive. But the Telegram burned their fingers, and now they're cautious, right? So they're not doing crazy regulatory things. They're doing sensible things, right? I'm a investor in the Pantera Early Tokens Fund, and Pantera invested early in a messenger called Kick Messenger, right? Kick Messenger was completely destroyed, right? Whereas like Telegram was just got their fingers burned. So now Pantera has made the largest investment in their fund history into Telegram, right? So, to me, 900 million users, like that's a really explosive potential. So I'm excited about Telegram, honestly.
Do you want Ben? Yeah.
I was just going to jump in and say we work with Telegram. Their ecosystem, they're very aggressive, but in a good way. Yeah, I would say this is definitely going to be a trend, and it's when you think of like builders. I'm on the builder side, obviously. We're always looking for where the volume and capital and the users are, and how do we get there. So it's really hard to overlook what Telegram has in terms of all of that. So yeah, I do think it's going to be a big trend. Back to your application, strike like lightning. Good chance lightning is going to strike on Telegram at some point. It's obviously way easier than setting up like a Phantom wallet or a MetaMask wallet and going onto Base and bridging assets. Telegram just speeds that whole process up, so definitely bullish on that.
Yeah, I'm really excited about Ton ecosystem. I was a little bit early there because about October 2023. So I just was really early, catch some good coins like Redo, which makes me 50x return, and another of them Fishcoin and something like that. Yeah, I'm talking about speculative side because I'm the man who speculates a lot. Yeah. I'm the Gijan, and I feel very, very good about it.
We need a DJ on stage.
Yeah. But what I can say, this is a big puzzle, as you say. Yeah, Panther Capital is just one dot. Yeah. Second one, Telegram is the 10, the biggest application which is downloaded every month. Yeah, a very, very big user base, as you say, 900 millions. Yeah, exactly. And what's more of the people who are in Telegram, they are in crypto. So onboarding them, it's really easy. They are just doing step by step. Right now we have KYC. I just hear you can buy a credit card in the near future. In Telegrams, there are going to be some applications, games. Right now there are tokenized stickers. So we have few of them. Utia, for example, that was the main sticker who the CAO of Telegram just passed on the presentation in Dubai 2049 token. So yeah, definitely I think we are still early in Ton, and Pantera Capital just only say, yeah, it's just beginning.
Yeah. Yeah, you look at market leaders like that. We've got a few minutes left on this panel. Adrian, just the last one for you. Election betting platform Polymarket got 70 million in funding from Peter Thiel's founder fund and Vitalik Buterin himself. It's an election year. You touched on it a little bit earlier. What's the value of that, and do you see that as a potential kind of a shaker in the next few months with the elections coming up in the US?
Overall, the more eyes the big people, the big guys, get on crypto, well, I think ultimately we are all the beneficiaries of it, right? So that's a good thing that those big guys, are coming in and raising funds basically for the crypto Web3 projects. I would say that one of the big narratives that translates a little bit to it, is having people like Larry Fink on top of BlackRock, those big guys. Talking about crypto as the flight to safety, as a flight to quality, right? As a flight to something very positive. Those are not my words, those are Larry Fink's words, right? And this is what actually builds the narrative, right? This is what builds the entire communication toward not only towards the investors, this is what drives crypto mainstream as well. So having Ton, those big players, like I said, like Larry Fink and the hedge funds coming in. And I mentioned briefly also the central banks, right? There's the supervising committee for the central banks overall. That proposed in 2022 in December and refurbished and improved the papers over the years with the latest in March 2024 about settling the risk measures and how to quantify the risk for different types of assets for the exposure for central banks, proposing 2% or more of investment of their reserves into crypto assets, into tokens, into stable coins, right? Into ETH applications.
I saw some tweets about this morning as well.
Exactly, right? So we have those big, gigantic guys coming in. I like this comparison to the sandworm come in. Basically, that's yes. What a little bit it looks.
Yeah. The maker, Shai Hulud. So quick comment on Polymarket. So one of the histories there is that Joey Krug actually moved as chief investment officer of Pantera over to Founders Fund, and he's actually leading all their crypto investment. He actually was a co-founder of Augur, right, which is the absolute first crypto prediction market. So he knows prediction markets. This is driving, so that's the driver. But to me, the thing that's amazing about prediction markets is that prediction markets are effectively fair meme coins. And what I mean is people are treating something like DJT, the Trump media stock, they're treating it as a meme coin that predicts whether Donald Trump will win the election or not, right? But ultimately, that may or may not be like a fair instrument, right? It may not be a fair instrument. Whereas if you go into a futures market, you can actually invest in a fair market that predicts whether a person will win an election or not, right? So to me, that's a big difference. So I think the future of meme coins may actually be futures markets or prediction markets.
Everything's a meme coin at the end of the day now. Friend tech keys, NFTs, prediction markets.
But what I love about prediction markets is that they're fair, right? Which is that the oracles and the responsibility of the market itself is not to defraud the investor and say, oh, the wrong person won the election, it was fake.
Yeah.
It's like, no, that shouldn't happen.
Yeah, there you go. What a fantastic panel. I think we could have sat here and chat all day about some of these big themes that are happening in the markets. Adrian, Miko, Ben, Oscar, thank you so much for your time. Thank you, MBX, and enjoy the rest of the conference, everyone.
Thank you.
Thank you.
Very much.
And thank you, Gareth, for excellent moderation. Thank you so very much.